Let's start with Rivian. Alex Coffey, other half of Next Gen Investing, joining me for a look at the stock, which is trading at the highest since 2 earnings ago in February. Alex, this seems like a really key thing for Rivian, which has been kind of desperate for an out, if you will, on a very troubled trajectory.
Yeah, the issue's been efficiency when it comes to Rivian's ability to scale up, Oliver. And so this is a much needed kind of inflow of capital to help them get to ultimately where they want to go. Volkswagen, as you said, announcing up to a $5 billion investment in Rivian. This starts with a $1 billion initial investment, set to kind of show the complementary strengths of both of these companies, bringing them together, meant to kind of accelerate the software development for Rivian, but also allowing for potentially a lower cost per vehicle by increasing scale and then speeding up the innovation globally. This is a much needed inflow of capital. As we said, it's in the form of convertible notes, Oliver. But this is building on yesterday's strength as well, which saw Rivian up upwards of 7 to 10%. Up another 30% today, as you said. It is off its highs from the pre-market. It did trade to almost $19 a share. It's currently just below $16, so one to watch certainly on the move today. Now, basically, all the analysts, it seems, have weighed in. Of course, this is a meaningful difference, and they're mixed in terms of the reaction. JP Morgan raised to 14, but keeps an underweight on the surprise announcement. You look at Piper Sandler, they have an overweight in 21, so sort of two kind of polar ends of the spectrum there. You look at D.A. Davidson, they have a neutral with a 12, so maybe a more down the middle look here, Oliver. They say that the Volkswagen deal comes at a cost. So as you can see, the devil's always in the details in these different deals as they're announced. So we'll see as more and more info maybe comes out and more of these analysts weigh in. But as it stands right now, the message seems to be mixed, but the market sees this as totally a positive.
Okay. All right. So I'm kind of a little bit surprised maybe that analysts aren't more giddy about it. Just because in terms of the news flow for Rivian, it's just been generally so negative for so long that to see a major legacy automaker willing to get involved, on top of Amazon's involvement too, it does seem that there are a lot of parties interested in Rivian's survival, and I describe it as survival. I don't think that's an exaggeration. I do think this is one of those companies that still is on the brink. So is it not fair to say that this takes them off the brink, at least gives them some more runway?
I think that's exactly right, but again, it's always at a cost. And so if it's convertible notes, maybe it's an efficient form, as it looks like Morgan Stanley says, relatively efficient form of capital raise. There's always a cost, though. Convertible notes means dilution for shareholders potentially down the line if it does work. So nothing's free in this business, as you know, Oliver. So as you said, perhaps the risk is worth the reward in the short term for some investors, but not all the analysts are convinced quite yet.
I think that's fair enough. It is kind of one of those things where beggars can't be choosers in a way, right? And Rivian, not to be too ad hominem, but kind of a beggar in the sense that financially it just has not looked good, and especially if the economy slows down at all. And after a year where companies like Tesla and everyone else has had to slash prices, it just hasn't been a great outlook for Rivian. So to the point of kind of the strings being attached to it through the convertible notes, okay, they get, they have to kind of sell themselves, maybe not their soul, but it does seem to be more positive than negative. Shares still up pretty good. All right, thanks, Alex. Good assessment. Appreciate that, Mr. Coffey, host of Next Gen Investing.